Yeah, hi Varun, good afternoon.
Hey,
It's a
Kazi.
pleasure having you here with us at this conference.
I'm glad.
I
Thanks for
think
the opportunity.
panel discussion was extremely interesting and engaging as well. So, for the benefit of our viewers, we just thought we'd have some sort of freewheeling questions, not just around fintech and disruption, but also about all the areas which have been core to what you've been working on. Maybe we'll start with impact investing. So, fintech and impact investing are at least perceived to be sort of opposite poles of the world. So, impact investing is all about doing good, helping the poor, helping the underprivileged. Fintech is all about destroying old business models, making new business models, creating hopefully humongous amounts of wealth. How do you reconcile these two? Do you see them as contradictory? Do you see them as working together? And to what extent have you seen that play out in your portfolio companies, not just in India but overseas as well?
Great. No, I think the convergence is real. I think there's a lot of convergence across impact investing, across fintech. It really depends to sort of the lens that you apply to it. At Quona specifically, where our focus really is looking at investments in the fintech space, specifically geared towards the underserved segments, right, and covering various emerging markets. I think we've always believed that all these things, go hand in hand. Whether you talk about the impact that you're creating, the core business model and its evolution, and the wealth creation that you alluded to as well. So I don't think any of these are disconnected. Just to give some real examples, I think. Especially in emerging markets, the problems that fintechs are looking to solve are very fundamental, are very basic in nature. It's more about creating access and providing better quality of services to existing customers, and that's largely financial inclusion, depending on how the business model operates and how it targets that particular problem, right? So it sort of goes hand in hand.
So at Quona, then how do you tend to look at measuring impact? Do you actually, when evaluating an investment, when you're actually taking a deal to investment committee, do you actually have some specific metrics which you look at for measuring sort of social impact?
Yeah, absolutely. So again, our LP base is also fairly diverse. So we have a fair number of DFIs as part of our investor base as well, and it's really important for us as a fund, as a DNA that we have, that we can quantify and very crisply articulate the impact our portfolio companies are creating. So we have an internal framework that covers 3 dimensions, which is access, quality, and markets, and that's how we measure impacts. But what's important to understand, on how financial inclusion, impact investing, and fintech, how these things have evolved over the last decade or so, has been that it's all becoming a lot more contextual, a lot more real, a lot more layered. So while earlier, financial inclusion was by and large looked at with the sweeping sort of lens of microfinance, I think that's evolved dramatically from where we started off, right? And with fintechs coming in, the nature of the problem that you're solving is diverse. The solutions that you're adopting is, very focused on different parts of that problem statement, and the customer segment is also very rapidly evolving, right? So for us as an industry and a firm, which focuses on this, it's been super important to keep abreast of these developments and keep it real, right? So which is why keeping all these metrics contextual is super important for us, right? So while you might have some sort of KPIs or that you aggregate across the portfolio, which need to make sense, going deep within particular business models and understanding how the business model itself converges with the impact that you're creating, and being able to articulate that specific impact either by way of KPIs or client stories. I think all of that is coming together pretty well.
So just leading in from there, so I understand that Quona operates in several emerging markets, Latin America, other parts of Asia, South Asia. So how do you see sort of the market evolving for fintech in these different economies? Do you see them all progressing at the same pace? Where do you see India vis-a-vis the other emerging markets in fintech adoption and in actually developing or attracting private capital to solving social problems which would sort of create greater impact across society?
So I'll answer that question from 2 perspectives, right? One is fintech specifically, or fintech more generally, And the second is the ecosystem, the funding, the availability of talent and founder quality, et cetera, across different markets. Now, the tricky or the more interesting thing about emerging markets is that it's full of contradictions. Individual markets are full of contradictions. So on one hand, you might have specific parts of the fintech value chain that are extremely mature and probably can give the developed markets a run for their money. At the same time, you'll have another part of the fintech value chain which operates in the era of dinosaurs, right? And this differs from market to market. So that context is super important.
One example.
So for example, if you look at India, our payments infrastructure is super solid. It probably beats most of the developed markets around. Obviously, it's been hard won. It's been a labor, by multiple parties involved in the entire development. But as the way it stands, it's super mature. At the same time, when you look at something like, insurance for that matter, right? Insurance still has room to innovate, still has room to grow. Whether you talk about distribution or product side of insurance, and we're seeing that happening. It's not like it's not happening, but it's at different stages of evolution. And that differs across markets, right? If you look at Brazil, for example, digital invoicing has been mandated by the government, a couple of years ago, right? And all SMEs have to file invoices digitally, and that's opened up the opportunity for a lot of fintechs to come in, work on specific problem statements like invoice discounting, factoring, focused on SMEs, really going downstream, not focusing on the long tail, not just the large corporates. India still is, on a certain path of evolution that we've had the treads come on board, etc., which is going to lead somewhere, but it's still changing at a different pace. So these dichotomies exist across, different markets in different ways. And the ecosystem obviously differs across different markets, but it's a function of a lot of things, right? It's availability of talent, it's about the founder pool, it's about investor mindset and macro risks and how you measure that out. India, thankfully, we started on a journey, and you would know this better than I do. We started on a journey, two decades ago with professional investors coming in. So we've reached a certain stage of evolution over a period of time. A lot of emerging economies, we're still seeing that develop at a different pace. Now, again, just because an ecosystem is developing differently or is perhaps at a nascent stage or a growing stage right now, doesn't mean it'll take the same time or follow the same curve as a market like India, right? So we're seeing large super platforms going super early in Southeast Asian economies, right? As opposed to a market like India, where there was still, there was a certain wait time, a certain scale that they wanted to see before investing. Southeast Asia, we're seeing different things. Brazil, we're seeing different things.
Okay. And so fintech has been synonymous with disruption. In fact, that's part of the theme of today's conference. So you've been investing in India for a while now. So do you see any of amongst your ecosystem, amongst your portfolio companies, how are they able to sort of adopt and embrace the change? Mm-hmm. So, for example, you'd have enough portfolio companies which would be having more brick and mortar infrastructure. How are they actually? How are you guiding them to transition to first clicks and mortar and then maybe to full digital?
I like that term. I'm going to steal that, the clicks and mortar. But so again, 2 ways of answering this question. One is that fundamentally we believe that emerging markets will be a combination of tech and touch. Right? You will not have a tech-only solution. You might have, but by and large, it's not going to be the tech-only solutions that solve the entire ecosystem's problems. So there will be an element of that, given the way industries are structured, given the way value chains are structured, given the way customer behavior fundamentally operates. Right? So there'll be some combination of that. And different fintechs, depending on, again, their business model, their mindset, are going to be at different parts of that gradient. So it's not just one sort of, it's not a binary approach there. And secondly, what's unique about fintech, and we were talking about this earlier, what's unique about fintech compared to most other industries disrupted by tech over the last decade or so is that you will never be out of the system. You'll still be a financial services company leveraging, a lot of tech, but you'll still be financial services at some point. So your touch points do not go away. Your touch points with the regulators, your touch points with incumbents, your touch points with traditional distribution rails will not go away. So you'll be disrupting specific parts of the value chain, and it'll hopefully come together to form an interesting outcome. So when we're speaking to our portfolio companies, I don't think there's one size fits all sort of an answer. So it's more contextual to each company.
Okay. So during one of our presentations during the day, I one of our speakers, I think it was the founder of Acco, he actually, okay, your namesake Vinod, he actually mentioned that there was a paucity of capital, that he finds it difficult to raise capital. So do you see this as a problem for fintech in India going forward, that if you have, say, one of the pioneering players in, say, digital insurance mentioned publicly that scarcity of capital is a problem, is this something which you would agree with, or do you see, again, the counter argument is that you have, I guess at the Series C, Series D levels, you now have humongous amounts of capital sloshing around, largely from, again, the Japanese, the Chinese. So there's some dichotomy there, that the seed guys, the Series A guys are starved of capital, while the Series C and Series D guys have abundance, or there's some paradox there. How do you explain it?
Yeah, I think that paradox exists, and venture investing, it follows its own cycles, right? So it's not like funding is dried up for everyone. It's not as radical as that. Funding can slow down for specific reasons, regulatory, macro, investor sentiment, arbitrary reasons. It could slow down. It'll never die out. At the same time, what that means is that businesses are getting funded out there, right? Whether the space that you're operating in is still attractive for investors, whether dynamics have changed, whether market conditions have changed since where you started off, or whether there have been enough learnings either globally or in your own market that challenge the premise or the business model that you're operating in. I think these questions are sort of a natural and organic part of the evolution of any cycle. So in terms of venture funding, at least what my perspective has been, that there's obviously a linear path when startups are raising funds. You have your seed, you have your Series A, your classic early venture funds, you have your Series B growth funds, and then you get into the big boys club. And when you're raising substantial pools of capital, where the market has dramatically evolved, right? You have super platforms, you have strategics, you have large private equity funds. You have different pools of capital available now, which weren't an option earlier. But if you look at the general evolution, right, each part of the funnel sort of leads and feeds into the other, right? So, when markets have been hot, you've seen a lot of seed investment going in, right? Because in a market like India, again, you have a lot of talent pool available. You have that tendency that if one player gets funded or one business model works, you see something. There's a lot of similar business models which suddenly pop up. And at the seed stage, the role of seed investors is to sort of curate that entire ecosystem, evangelize that, and obviously while hopefully picking winners along the way, right? But what that means is that your investments start getting a lot more dispersed. So availability of seed capital technically goes up at the aggregate level, but at the company level, it might actually be falling, right? And when that feeds into the Series A cycle, Series B cycles, what I've particularly seen in India is that we've had a fair share of fintech startups that popped up maybe 3 years ago, maybe 4 years ago, and who were successful in raising funds at that point in time. But by the time you hit a growth stage, a lot of fundamentals start getting questioned very differently, right? As a financial services player, you can't operate on a cash flow economy, right? Your money is your working capital, money is your product in different ways, right? So a lot of the fundamentals start getting challenged at that particular point in time. And I mean, it's unfair to make a sweep or statement there, but that's when rubber really hits the road, and a lot of things start getting questioned differently.
Okay, so just leading on from that to one last question. So as a VC, looking at the fintech space, so let's forget about the broader spaces which you undoubtedly look at as well. Within fintech, which do you think is the most attractive segment in the market today, both from a market potential perspective as well as from a opportunity set available in India today?
Interesting question. So again, so first of all, we're fintech only. So all we do is fintech across emerging markets.
My apologies.
No. But no, the point I was trying to make is that, so this is all we do day in and day out. So
within fintech, what would you think is most attractive? Like, say, if we just take the course of the presentations and discussions we had today, we saw an SME lender, we saw insurance player, we saw a payments player, we saw a credit provider to individuals. So we've seen robo-advisors, we've seen robo-advisors to the wealthy, robo-advisors to the underprivileged. So within all these segments, what excites you the most in terms of market opportunity?
So here again, I will give you two answers. One a more general, and secondly, hopefully a more specific one that will answer your question. So the general answer here is that across these spaces as well, while at the surface it appears that these segments have existed for a while, whether you look at say something like SME lending or consumer lending, you see a couple of early winners emerging across markets, but that does not mean that the space is done.
Yeah.
Right. So the market is large enough in India for pretty much whatever you decide to do, as long as it's mass market focused. You'll find consumers out there. You're not necessarily eating into someone else's pie. And secondly, in terms of the industry learnings itself, you see second, third waves of more refined models in similar spaces come out, getting more specialized. So even SME lending, while 5 years ago we saw a couple of players start off doing more horizontal stuff, we're seeing a lot more specialized players right now. Same for consumer lending, etc. So that's the more general answer. So across these spaces, we're continually finding newer, refined business models coming up. So it's unfair to sort of compare and contrast and say, you know what, this is less attractive, that's more attractive. But in terms of my personal thesis on what we find interesting, I think we're seeing that amalgamation of multiple products into a consumer-focused delivery in sort of a unified way, right? I'm trying really hard not to use the word digital bank or digibank or neobank, but if you look at how some of the developed or even the emerging markets like Brazil have evolved and neobanks have become super large, and we've made a couple of bets and we've seen good great success out there. I think here in India we should start seeing more of such players come on board, right? Which have sort of a multi-product approach, which have a user-centric design and a unified consumption interface for the users. So both across SMEs as well as for consumers, we should hopefully see some of that crop up.
Okay. Thank you so much for your time. This was absolutely fascinating. A big thank you from all our viewers. I'm sure they're all going to enjoy this interview.
Absolutely. Thank you for having me, Kazi.
Thanks.
Wonderful.
Bye.